Hey, good morning, guys. This is PandaQuant, and today we're going to talk about what am I thinking as of Monday. So the market sets are pretty volatile in nature right now because of the geopolitical confrontation between US and Israel. So there was a coordinated strike which has been extended. The major leader of Iran is dead, but still there is a lot of been noise throughout. So the very first thing which happened is the closure of Strait of Hormuz. So why this is important is because of the 20% of the global petroleum trade which happens basically vanished, and the oil traffic dropped to 40 and 50%. As of my previous tweet, I thought it was 70%, but all of the big firms, which is Hapag-Lloyd and Maersk, they all have suspended their straight transits. So what could happen on the moment Sunday evening open is basically a $5 to $20 barrel increase, and Brent could spike up to $80 and $100. This is war, and war is money. So likely, I feel that the oil prices are gonna go up. Whatever like the damage UAE and all Gulf countries are having, but mostly the moment oil goes up, they are actually making more money because of the war. So you never know like what's happening, but that's what it is. Like the straight traffic 40 to 50%. Brent was closed on $72 and as of Friday, but it is expected to gap up to around like 80, 85 maybe. And the oil which is at risk is around like 20% of the global supply. It mostly goes to the Asian markets, does not affect the US because they have their own shell. They have their own basis plans, and then mostly you would see that the OPEC that basically drives the oil, there could be some different things happening. So war is sometimes profitable. You don't know like what's going on, but at the bigger, it's a very big game which happens. So where is the SPY kind of, if you are trading and kind of looking at different pivots where if you want to buy SPY or not. So here are like three different things, right? There is only 15% chance, I would say, that is a bull case. Most of the time, what I have seen is mostly it's going to be sideways. Any missile or anything which goes into UAE or any of the neighboring countries near Iran, then it becomes bearish. If in the previous time there was a lot of airstrikes and then nothing happened, because at that time none of the major leaders were involved. Mostly everything was strategized, and then there was a light missile which hit US territory, so that's why none of the confrontation happened. But this time it's different. Don't think that the markets are gonna go up. The bull case, the chances is 15%. I think first is gonna go up because of people celebrating the supreme leader got killed, but and later on the smart players, they know that it's gonna be a long war. Maybe, no one knows. So that's what I'm saying. Mostly it's gonna be sideways, and if any more confrontation happens from Iran to the neighboring countries, it's 40% bear case. Be very cautious about that. Over here I also have marked the labels over here, so you can see that how the pivot was over here. So that's why my lines that you are seeing over here is a ascending line, and I mostly talked about in at my channel that this ascending line is slowly breaking because of the trajectory that you are seeing. It's going down. So mostly you can see that it's going to be in this range, and if it breaks down below this white support, it's going to go down even more. So be very cautious about that. So what are what are the major things that you should do? So there are some defense energy plays, so like invest in energy, ExxonMobil, Chevron, and Occidental Petroleum. These are some three stocks which is, but I would say like the moment the Monday market is the Monday market it opens is gonna gap up. The only way you will make money is think about future. If you think that the war with Iran is going to continue, then only buy those. Otherwise, if it de-escalates, you won't make any money. Mostly you would be losing money. And similarly with different defense bets. But I would say these are the long-term hold. Just think about it long-term, like ExxonMobil, Iran. Like imagine they have US get got control about from Venezuela, and now in Iran, if they get a control, then these would be a long-term play. Lockheed Martin definitely is a long-term play. Most of the people talk about Palantir and how softer it did, but the base work, the groundwork is Lockheed Martin. It's a very big defense play. So keep an eye on that. And then AI semiconductors, there is a lot of talk about AI semiconductors because of the war and different nature. So these three are the major stocks that you need to keep a watch on because of the Broadcom earnings, which is going to come up. So like the conviction is that it's going to move very high because it is still a leader because Google and Meta, all of these companies uses AVGO. Similarly for Nvidia is at a very low point because the market has been selling off because someone knew about this war happening. So you should be looking forward to buy Nvidia when it comes down to around 180 something. And then Marvel Technologies is another one. It's kind of a beta play. If you think that this is a technology which is evolving, you should definitely try that. And what are the catalysts and the landmines, right? Monday you will see the all futures kind of going up. Similarly, if manufacturing index is coming up, and then there is earnings of 115 plus companies, so careful on that. So Monday I won't be buying anything. Mostly I will be just first checking the markets, how they are behaving. Tuesday is basically where you kind of think what's going to happen. It's like AutoZone earnings are there, and then 83 other earnings, but Iran developments, that's the major thing. Because Monday I don't know if they're going to do anything, because once a leadership changes, there is a lot of delay which happens in decisions. Similarly, we'll see like Iran taking action either on Tuesday or Wednesday. And Wednesday is the major thing, Broadcom earnings after bell. Well, it's one of the trade ideas that I have. I'll talk more about that. Thursday again, employment, jobless claims, and again earnings. I feel there would be like some kind of research which is going on, like how much employment and jobless AI is coming, and it's coming hard. So I feel that I don't know what's going to happen, but the numbers are going to be still a stable bit because it's not already at that stage. And then on Friday we have non-farm payrolls, Michigan consumer, and then those kind of contexts over here. So let's dive into the major trade ideas. ExxonMobil all gap play, just buy it in case you think if there is a pullback in the Monday morning. Try to think buying it as a long term. Do not put it in a short term. Short term things is basically VIX calls and puts. VIX spreads is basically, I will say, to buy because it's gonna gap up, and then you can actually get a lot of money through spreads and lose less amount of money. SPY puts. The moment I would say like the Monday it might end up in green, so around like afternoon you should buy some puts and try to see, okay, so but you have to be sure that you think that Iran is gonna come back stronger. AVGO. So AVGO, you will see the stock going down because of this war news on Monday morning. That's a point you should buy. Wednesday they have their earnings. So target entry at around like 300 and target at around 345. That's a long-term play. Keep it and just hold on. Similarly, gold, it's like a safe haven. LMD and Nvidia. So Nvidia and AVGO, I would say, is a buy. ExxonMobil, if you think like a long-term position, but still I feel long-term position in Nvidia and AVGO will make you more money. But for a short term, if Iran is escalating the situation, ExxonMobil and Chevron are gonna be the major buys. LMT's it's a all-around defense structure. I talked about the massive funding in 10 years that US put into its defense sector. So LMT is all-term buy. Like try to always have some position on that, and it's a safe bet because it doesn't go down. And then this is what the risk looks like. It's like 9 out of 10. It's extremely risky. Even I would say to stay out if you don't want to trade, because the dip happens, you don't know how much it dips. So stay safe, guys. Just be careful about whatever positions you are taking, because the idea is to make money. When something is volatile, you just stay out of it and do not trade. Thank you so much and have a great day.